So welcome back to the philosophy and history of insurance in general. And then we're going to bring it a little bit more focused. We're going to bring it to level funding in general and the not just the structural advantage, but the philosophical advantage of level funding if you communicate this with your plan owners and plan members, which you really need to do as the broker. Because the claims fund inside of level funding is not type 4 money. Folks, it is type 3. And when you have that moved up, effectively you have greater efficiency or delivery of the utility of those dollars, but only if you coach them, only if the members actually know about it. If they don't know, then it doesn't change, right? Not to go whimsical jailer on you philosophical guys out there, but if someone doesn't know about something, then they're not going to change their activity. If they know about something, then they have the ability to change, and then you can actually measure the effects. We're going to cover a quick history of level funding in general. Level funding is a couple of things together. Level funding sits under a program called ERISA. And ERISA was a law passed to allow companies to better maintain, manage their employee benefits, retirement, that type of stuff. Now with that, level funding takes that, sits underneath that chassis of self-funding, and then puts together a couple of pieces. Underwriting, companies like ATA, will produce an expected amount of claims. Now, the better off they are, the more accurate that expected amount is. Additionally, they'll put stop loss on it. Now, for everybody on this communication, I'm guessing you know what stop loss is. But if not, then stop loss is basically Big Daddy fourth type of money sitting behind the plan if you have a major claim. Number 3 is accommodation. That stop loss generally has an attachment point or a trigger amount for the deductible of the plan of $10,000, $20,000, $50,000. Now, if that comes in early in the plan year, accommodation will accommodate the plan or advance to make it easier for the small group, the amount of money needed, and then it will make it up throughout the rest of the plan year. So that's why you need a 12-month contract, frankly. That accommodation normalizes or makes everything flat for the small business owner. And then finally, they have a thing called a corridor. And that corridor is additional money that the underwriter or the state will actually mandate in most cases that puts on top of the expected claims. Now, you can see how good someone is at underwriting by how often they actually have surpluses from their expected to their corridor. If they never have surpluses, well, then they're really bad at, frankly, being compliant with the corridor side of the regulations that exist in many states. So, how do you go about taking this opportunity to educate the member more deeply and the plan owner specifically to get better utility out of the dollars? Because remember, what we're trying to do is keep that money self-funded so it stays in Main Street's pockets, not getting shipped off to someplace hundreds or thousands of miles away called Wall Street. So we've got a couple of tools that you can use. You want to show them the true cost calculator. You can also always call ATA, our marketing service. We can walk you through some things. And then you also want to get a commitment from the plan owner, or this is something else that a lot of brokers use, is you get a commitment from the plan owner that if there is a surplus, when there is excess money, that business owner, that plan owner will go ahead and enrich the benefit package through lower deductibles or through additional benefits so that the members themselves benefit. Again, it's about changing the class of money. And if they don't benefit at all, then it doesn't change the class of money. But if the members benefit by receiving dental coverage or group life or vision or a lower deductible, then they're much more likely to be prudent. When you change the incentives, you change the outcomes. If you want different outcomes without changing the incentives, well, I think that's the definition of either insanity or dreamlike thinking. Neither one belong in the insurance space. So whenever we look at this, we can gauge how well a broker communicates, not on each individual case, but on his block or her block by how well they're actually getting referrals and utilizing the excess money. So referrals are a great way to gauge how well a broker communicates the value of level funding. When someone feels that they have had a great experience, they have moved the class of money up, they have received surpluses back to the plan, then they're much more likely to introduce to a brother, sister, cousin. And that is a great proxy for how well you're serving your client. If you're not doing it well, then you're not getting many referrals. Or you're not asking. Folks, I can't tell you how many times I've seen brokers fail to ask for referrals when they've wowed their customer or wowed their client. Now, we put together a calculator that the bottom of it shows you the value of a referral for your block of business. It is insanely valuable. And if you are too afraid to ask a client for a referral, and you see the actual value, which is $500, $600, $900, or whatever the number the calculator produces, that's the effective value of just that referral. You're asking someone to give you a $1,000 bill or five $100 bills. Well, are you man enough to ask? It's not a tough thing to do, but the money can be massive, and the money can change the way in which your business operates if you're willing to do that simple thing, which is wow your client and then ask for a referral. Who else can I help? So how are you getting your clients? Well, if you're on Main Street, you should be getting a lot of them from referrals. There are additional ways that you can get them, and they all tie into the philosophy and history of insurance. What other folks are needing a bit more service? What other folks are needing to retain their clients? What other needs can you fill? So if you can highlight how your customer benefits from your services, then you'll be much more accurate in targeting your marketing and also bring them into your company. Remember, business is just a synonym for problem solving. And the more complicated the problem that is that you solve, the more you can charge for it. Level funding is a more complicated solution for the small business owner, which means the broker should be making more money on average per case than the fully insured market. I think they do. Now with that, that's completely fair. You're doing extra work. The client's getting a better product at a lower price, and you get to have a better life for you and the people you want to take out to dinner on a Friday night. With this, there are multiple calculators that we built at ATA to try to help highlight what it is level funding does well, how it can benefit you and your business. And I hope that you've gotten a little bit more of a deep understanding of the philosophy and the mechanisms inside of insurance and how it drives, those two things drive better consumption, better prices, and better employee and client retention, which is what the entire game is about in the insurance business. You want to serve and maintain those relationships so that you can grow and have a good passage through time or good life with the people that you serve and you care about on a day-to-day basis. So I hope you enjoyed this. If you have any other questions about level funding, or if you think my history or philosophy of insurance is completely off, man, I'd love the conversation. If you're nerdy like me, well, I got nothing but time for you. Let's have some fun out there. Let's go help some people. Go sell something. We'll see you around.